bode ill for Q3, these profit warnings, or are we reading too much into that?
Good afternoon, Axel. Well, I mean, quite possibly. I mean, analysts have had a perennial problem with calling the earnings season in Europe over the past couple of years. If we wheel back to last year, analysts were expecting 10+% earnings growth, ended up with -2. This year, they're expecting going into the year 9% growth. Now it's a contraction of -1. Next year, they're expecting 13% growth. Are they going to deliver it? Big question mark. Some of the companies you mentioned, of course, have been hit by, turmoil in emerging markets. So Unilever in particular comes to mind. Weak emerging market currencies means lower translational earnings back into euros. And of course, the euros are at a very strong high level at the moment.
Yeah. I mean, we've picked out a few stocks, obviously, and you said exposure to emerging markets. Which sectors do you think are most exposed to potential downside now going into Q3?
Oh, Lord. Well, I mean, I certainly think that, given the performance, some of the consumer durables, particularly, again, in the emerging market side, are actually quite vulnerable, if only for the fact that they're some of the best performing stocks so far this year. But it's very, very difficult to call. I mean, Europe is intrinsically a relatively cyclical market. There's a relatively high level of operational gearing, relatively high level of financial gearing. So calling these earnings numbers going forward is very, very difficult indeed. And I have to mention, by the way, Ryanair, the market reaction was really the fault of analysts because they didn't listen to the guidance in the first place, and it merely came in at the bottom end of guidance. So that's why that crashed and burned, as they say.
Just looking at relative strength, the sectors that have shown relative strength, banks, airlines, industrial and autos. So the airlines are definitely in there. Technology and real estate, the most expensive sectors apparently in Europe right now. So I guess we can expect some pullback on those.
Quite possible, though you'd have to say, housing bubbles are not something which is unusual to the UK now. It seems that they're cropping up all over, certainly the core of Europe. The Berlin property market is absolutely booming. Word of caution, I'd have to say, on the banks, though. Mario Draghi, the ECB last week, we're launching the asset quality review, the AQR. So we don't know how much equity raising is going to have to happen with these European banks over the next 12 months. We don't know how much EPS dilution shareholders have in store for themselves.
I mean, do you think, I mean, we threw around a few numbers at the beginning. Do you think that analysts have been getting way ahead of themselves? When we look at some of the gains, Euro Stoxx 600 up 9% in the July to September quarter, S&P 500 5%. Do you think they're getting a little bit ahead of themselves?
I think so. I mean, it feels like a very crowded trade at this point in time, and we've had something like, if you factor in the currency, a 10% outperformance of Europe versus the US, and we've had the flows to back that up. My worry is, are you actually going to see the sort of momentum that's going to be programmed into prices? The key thing here is that on a forward multiple, Europe is now trading at pre-crisis levels. It's all been about a multiple expansion story over the last 2 or 3 years in Europe. So if the numbers aren't delivered, then the market's going to be in trouble.